Hello and welcome. Today, we will break down the essentials of your action plan for financial freedom, inspired by the guide, Personal Finance for Beginners, which provides straightforward strategies for budgeting, investing, and building wealth. Your action plan for financial freedom. Step-by-step checklist. Setting milestones. Tracking progress. Adjusting your plan as life changes. Before I explain each section, I would like to ask you to like, comment, share, and activate the notification bell so you won't miss any upcoming videos. These videos are designed to help you achieve your personal financial goals, build wealth, and lead a fulfilling life. Now, let's dive in. Your action plan for financial freedom. Create a checklist, set goals, make a budget, start saving, pay down debt, invest, and protect your future. Celebrate milestones, like paying off a credit card or reaching a savings target. Use apps and spreadsheets to monitor your progress and adjust your plan as life changes, whether it's a new job, marriage, or children. Flexibility keeps you on track towards wealth. Step-by-step checklist. Achieving financial freedom requires a structured action plan, and a step-by-step checklist can help guide you through this journey. The first step involves setting clear financial goals. Whether it's saving for a home, planning for retirement, or creating an emergency fund, having specific and measurable targets is crucial. For example, if your goal is to save $20,000 for a down payment within 5 years, break it down into manageable monthly savings. This clarity will provide you with a sense of direction and purpose as you move forward. Once your goals are established, the next step is to assess your current financial situation. Take a thorough look at your income, expenses, debts, and savings. By creating a detailed budget, you can identify areas where you can cut back on unnecessary spending. For instance, if you notice that you're frequently dining out, consider reducing the frequency and reallocating those funds toward your savings goal. This step not only highlights areas for improvement but also empowers you to take control of your financial narrative. Following this assessment, it's important to build and maintain a solid emergency fund. Life is unpredictable, and having 3 to 6 months' worth of living expenses set aside can provide peace of mind. This safety net will ensure that unforeseen expenses, like car repairs or medical bills, will not derail your financial progress. To make this easier, set up an automatic transfer to your savings account each month, treating it as a non-negotiable expense. After you establish your emergency fund, focus on paying off high-interest debts. Consider using the avalanche method, where you prioritize debts with the highest interest rates first. For example, if you owe $5,000 on a credit card with a 20% interest rate and $2,000 on a personal loan at 5%, allocate extra payments toward the credit card. This approach not only saves you money in the long run but also gives you a sense of achievement as each debt is eliminated. Finally, invest in your financial education and personal development. Read books, take courses, and stay updated on financial best practices and investment strategies. This continuous learning process will empower you to make informed decisions about your money. Additionally, consider seeking advice from financial advisors who can provide tailored guidance based on your individual circumstances. In summary, following this action plan through structured steps, setting clear goals, assessing your finances, building an emergency fund, eliminating debt, and investing in your education, will help you move toward financial freedom. It's a gradual process, but with persistence and dedication, you'll find yourself on solid ground, ready to embrace the financial future you envision. Setting milestones. Creating an action plan for financial freedom is not just about setting broad objectives, it also involves establishing specific milestones that can help you gauge your progress along the way. Milestones break down your journey into manageable and achievable segments, making it easier to stay motivated and focused. To begin, envision your long-term goal. For instance, if your aim is to retire comfortably by age 65, set milestones that allow you to evaluate your progress toward that goal every few years. A practical early milestone might be to save a specific amount for retirement within 5 years, let's say $50,000. This benchmark provides clarity about what you need to accomplish, encouraging you to consistently contribute to your retirement account. Once your primary milestone is established, consider intermediate goals that lead you there. For example, aim to contribute at least 15% of your annual salary to your retirement savings each year. By breaking this goal down into monthly or quarterly contributions, you can track your progress more effectively. As you make these contributions, you could also set a milestone to check your account's performance annually, ensuring that your investments are aligning with your risk tolerance and growth expectations. Additionally, you might want to incorporate milestones related to debt reduction. If you have student loans and credit card debt, create specific targets for how much you want to pay off within designated time frames. For example, you could set a goal to pay off $2,000 in credit card debt within 6 months by increasing your monthly payments. Achieving this milestone not only alleviates financial stress but also builds your confidence as you see tangible results from your efforts. Moreover, do not overlook the value of personal growth milestones. These could involve attending financial literacy workshops or completing online courses to enhance your investment knowledge. Committing to learning at least 2 new concepts each quarter can significantly empower your decision-making skills. This progressive education will arm you with the tools needed to make informed choices about investments and savings strategies, further solidifying your path towards financial independence. In conclusion, setting milestones within your action plan not only clarifies your financial trajectory but also serves to motivate you along the way. By defining specific measurable targets, be it in retirement savings, debt reduction, or personal development, you create a roadmap that keeps you focused and engaged. As you reach each milestone, celebrate your achievements and reflect on the lessons learned. This approach will foster a sense of accomplishment, ultimately propelling you closer to the financial freedom you aspire to achieve. Tracking progress. Tracking your progress toward financial freedom is an essential step that ensures you remain on course to achieving your goals. Regularly monitoring your financial journey can provide valuable insights, enable adjustments to your strategy, and keep you motivated as you see how far you've come. To start, establish a routine for reviewing your financial situation. For instance, you might choose to assess your progress every month. During this review, examine key metrics like your savings rate, debt levels, and investment growth. Creating a simple spreadsheet can help you keep track of these figures. In this spreadsheet, track your contributions to your savings account or investments, and note any changes in your debt amounts. Simply seeing these numbers can serve as a powerful motivator, highlighting your commitment to your financial goals. Furthermore, incorporate specific milestones into your tracking process. For example, if one of your goals is to save $20,000 for a down payment on a home within 2 years, break this down to monthly savings targets of about $833. Each month, when you meet or exceed that target, take a moment to celebrate that achievement. Recognizing these small victories can boost your morale and reinforce your habits, making the savings journey feel more rewarding and less daunting. Additionally, do not forget to track your expenditures diligently. Create categories for your spending and review them regularly to identify areas where you can cut back. If you notice that your dining out expenses are consistently higher than you'd like, consider implementing a budgeting app that allows you to set limits for each category. By monitoring these expenditures, you can make real-time adjustments to stay aligned with your financial goals, ensuring that you are not derailing your progress with unnecessary spending. Moreover, it's beneficial to track your emotional relationship with money alongside your financial figures. You might consider journaling about how your financial progress affects your overall well-being and stress levels. For instance, after paying down a significant chunk of debt, reflect on how that achievement makes you feel. This emotional tracking can help you understand the non-numeric impacts of your financial journey, reinforcing the importance of staying the course. In summary, tracking your progress toward financial freedom is vital for maintaining motivation and ensuring that you're headed in the right direction. By establishing regular reviews, monitoring key metrics, celebrating milestones, and staying mindful of your spending habits, you create a comprehensive system that keeps you engaged in your financial journey. Ultimately, It's about creating a structured approach that not only charts your financial growth but also empowers you to take control of your financial future. Adjusting your plan as life changes. Adjusting your action plan for financial freedom is a crucial step in navigating life's inevitable changes. Our financial situations can be impacted by numerous factors like job changes, family dynamics, or unexpected expenses. Therefore, it's essential to remain flexible and ready to adapt your plan to ensure that you continue moving toward your financial goals. For instance, consider a scenario where you receive a job promotion with a significant salary increase. This is a fantastic opportunity, but it also means you'll need to reassess your current financial plan. Rather than inflating your lifestyle excessively, you might decide to allocate a portion of your increased income toward aggressive savings or debt repayment. If you previously aimed to save $500 a month, consider increasing that to $750 to expedite your journey toward financial independence. This adjustment not only helps you take advantage of the improved financial circumstances but also reinforces the habit of saving more as your earnings grow. Conversely, let's say you encounter an unexpected financial setback, such as a medical emergency or a job loss. In such scenarios, it's vital to revisit your action plan to accommodate the change. You might need to pause certain savings goals temporarily, redirecting funds to cover immediate expenses. For example, if your goal was to save for a vacation, it may be more prudent to shift your focus toward rebuilding your emergency fund. Acknowledging this shift and making the necessary adjustments ensures your financial plan remains realistic and aligned with your current situation. Additionally, life events such as marriage or having children will also require adjustments to your financial strategy. If you get married, consider combining your finances and discussing shared goals with your partner. This might mean reevaluating how much you both want to save for a home or even starting a college fund for your future children. By creating a joint plan, you can leverage your combined resources and set achievable milestones that reflect your family's aspirations. Moreover, regular check-ins with your plan are essential. Set aside time every few months to review your financial goals, assessing whether they still resonate with your current circumstances. Life changes can alter priorities, so it's important to ensure that your action plan evolves alongside your personal journey. If you find that travel has become more important to you, consider where you can adjust other areas, such as entertainment or dining budgets, to make room for your new financial priorities. In summary, adjusting your action plan for financial freedom in response to life changes is key to maintaining your momentum toward your goals. Whether you're celebrating new income sources, addressing unexpected challenges, or shifting family priorities, staying adaptable will allow you to navigate these changes effectively. By regularly reviewing and refining your plan, you will not only safeguard your financial future but also create a roadmap that genuinely reflects your evolving life journey. Thank you for watching. If you found this video helpful, please like, comment, and don't forget to subscribe. Share this video with friends and family. See you in the next episode. Please take a moment to check out these guides by the same author, Zabi Aslamzadeh, available on Amazon. Personal Finance for Beginners, an essential roadmap to financial freedom, offering straightforward strategies for budgeting, investing, and building wealth. 10 powerful yoga styles to enhance health, boost vitality, and support longevity. Transform your life, the ultimate meditation journey to inner peace and empowerment. The Path to Wellness, Yoga and Meditation as Foundations for Health and Longevity. These guides are designed to provide valuable insights and practical tools to help you achieve health, wealth, and happiness.